the hype and the demand for AI chips keeps on coming, I think TSM is going to be a leader in the supply chain globally.
Some bold calls on some of the most controversial AI stocks.
AMD should be just as valuable as Nvidia.
MarketBeat's Gabriel Ossorio-Massili shares 3 chip makers he believes have finally reached a bottom.
This company is being discounted by a lot.
He'll share why he thinks these 3 companies have a chance for a massive comeback.
What are these chips being used for?
Plus, stick around for a bonus AI pick at the end of this video for another hot take on a very controversial stock.
It's outperformed the market, it's outperformed the peer group, and I think that it has a chance to get to a new 52-week high as well.
Will you share his bullish outlook on the future of AI or have your own defense for an AI bear market ahead? Let's dive in. All right, Gabriel, so let's talk about this chipmaker comeback. There's a big acquisition that recently happened that's kind of renewing some hope for this sector.
Right, and as you see, when valuations get to such a low level that institutional players have to step in, that typically sends a signal to the rest of the retail sector or retail investors. And recently, with SoftBank acquiring a new chipmaker company in the AI space, I think that the common trend is AI names and semiconductors and chipmakers even are at the lower end of their valuation curves, making an opportunity today.
Yeah, now part of the bottoming out of these chipmaker stocks really started back in January, Gabriel, with that DeepSeek announcement. And that's when investors kind of had some more naysayers out there about the importance of chipmakers in the AI revolution, that maybe chipmakers wouldn't be needed quite as much because of what DeepSeek was able to achieve. What do you say to those who believe that chipmakers aren't as important as they once were in the AI revolution?
Well, I'll tell you what my late boss at Goldman Sachs always told me, and it's that if it's on the news, it's already too late and it's already priced in. That's what I would say to the naysayers. And fundamentally, not even looking at the charts, if you lower the cost of entry into any industry, you're only going to drive out more demand for the service or products that are being made. So DeepSeek, its claim is that it can make the same models for AI at a cheaper cost and a faster rate. So if that is true, because remember, none of these claims have been proven at all. So even if they are true, it means that people can get into AI development at a faster rate, at an easier rate, and cheaper as well. So if that is true, all of these players are going to see their orders go through the roof as more companies as more businesses, as more customers start to develop their own AI models for their own purposes. So I think that if anything, DeepSeek should have been taken as a bullish development for the industry, not as bearish.
They've certainly seen a decline a lot since the first of the year even. But let's get to your pick of 3 chip makers that you think have found a bottom now and are just going to start with that big rebound in the future.
Right. Well, the first one on the list is one that has been making a breakout on the chart recently, and that is advanced micro devices. Now, Wall Street defines a bear market when a stock or index or any other financial asset goes to a 20% or more decline from recent highs. AMD now trades at 60% of its 52-week high. It is definitely in deep for a bearish territory. But the difference that this trade makes is now that SoftBank and other institutions are buying up AI names and semiconductors specifically, I think this stock has a fantastic risk to reward today.
We've talked about AMD on our channel a few times in the last couple of months, and investors are losing real money with this company. I think a lot of investors have been burned by AMD so much that some just aren't willing to jump back on that wagon yet. What do you say to those investors out there who have lost their investment on this company about maybe getting back in for the future?
Well, there's a very big difference between being a trader and being an investor. When you're an investor, you have to keep the long term and the fundamentals in mind, not the charts. When you trade, sure, you could blame it on the stock, you could blame it on the chart when it goes down and to the right. But my main thesis for AMD would be the discounts compared to other names like Nvidia and even TSM, Taiwan Semiconductor, where the discounts don't really justify themselves comparing them to the fundamentals and the revenue growth in the company, which is why analysts still see such a high valuation today, which is double digits up from where it trades today.
Yeah, in the last few weeks, there's been some discussion out there about AMD's chips being just as strong as some of NVIDIA's chips. Do you see AMD becoming a true competitor with NVIDIA in the future?
Well, I don't just see it, I'm witnessing it right now. As you said, the fundamentals show that the technology behind AMD is just as strong as NVIDIA. And if the fundamentals play out here, then the valuation should follow. The only difference is that AMD has not become as popular amongst mainstream media, amongst retail traders and Wall Street forums online. So, really playing a popularity game on the short term. But as Warren Buffett says, the stock market is a voting machine in the short term and a weighing machine in the long term. Now, when it comes to the next quarter or 2 quarters down the line, I think that this weighing machine is going to figure out that AMD should be just as valuable as Nvidia. And considering that it trades at 60% of its 52-week high, I think that it is a no-brainer given that the worst case scenarios might be already priced into the stock.
All right, well, that's a solid case for your first chipmaker stock. Let's move on to your second stock pick in this category.
Well, that would be Taiwan Semiconductor. And now there's a lot of controversy around this stock, given the fact that it is so close to the China risk, so close to tariff risk. But there's one key difference that the company has made recently, and that is an investment of up to $165 billion into bringing their foundries from Taiwan into the US to states like Ohio, Arizona, and New Mexico as well. With that shift, investors can really see the mitigation of the risk on Asia and the tariffs and everything else by investing in one of the biggest customers, which is the US of A. Now, any success that AMD has, that Apple has, that Nvidia has to be tied up with Taiwan Semiconductor's success. Why? Because they provide the basic materials and the basic foundational chips that make all of this technology work. So there wouldn't be an Nvidia without TSM. There wouldn't be an Apple without TSM. And that to me, that market share, that market penetration, that business moat, so to speak, makes TSM a no-brainer buy at today's level. Now, the bearish story lies within the geopolitical risk, the China potential invasion of Taiwan, the tariffs. But I think that all of these reasons have been put aside. And keep in mind, Warren Buffett picked this stock for a reason. Now, he did sell it because of these geopolitical risks, but now that they're put away on the side, I don't see any reason why Buffett couldn't come back to the stock and why investors shouldn't either.
Yeah, has TSM started to see a little boost in its stock chart because of all of these recent new announcements with a new investment into US facilities?
Right. Well, as I mentioned, those investments will put away some of the perceived risk in the company. And in today's list, it is actually the best performing stock relative to 52-week highs, right? This one is now breaking through that 80% mark where it would put it from a bearish territory to bullish territory. Now, this momentum will not only attract more institutional buyers that rely on this optimism strategy, but also fundamental value players that realize there is no risk anymore for TSM. And if the hype and the demand for AI chips and AI technology keeps on coming, I think TSM is going to be a no-brainer play as the leader in the supply chain globally, not just for the US, but the entire technology sector.
That's a big call for TSM's future. Let's move on to your third pick for a chipmaker stock that has a bright future ahead, but this one is a little more of a risk, it sounds like.
It is. This one is ASML Holding. Now, this company is based out of Europe, and the biggest customer out of this company is China. Now, China has been placed under an embargo law that doesn't allow it to import some of ASML's machinery. Now, this company has a sort of a monopoly when it comes to chip making because all of the manufacturing equipment that allows it to make the 3 nanometer chips that we all know and love today from NVIDIA, like I said, Apple uses them, Samsung, and all the other consumer electronics. That embargo is going to take out a significant chunk of the company's revenue, which is why I think it's going to be a riskier play. But now that it trades below 70% of its 52-week high, I think that risk might be already priced in. And who knows, maybe going on in the future, China and the US come to a better trade agreement, a better technology IP agreement that allows them to keep importing a limited or a modified amount or modified model of ASML's equipment for manufacturing semiconductors. Now, that would erase all of the risk that is present for this company. Just like Taiwan Semiconductor, we know what the risks are, we know what the probability is, and we know that today's price, at such a heavy discount from 52-week highs, make them a no-brainer and a potential rebound as soon as these concerns are put to the side.
Like you said, a lot of that risk is already priced in. But if you're looking to reduce more of the risk in your own portfolio, check out our free premium report at marketbeat.com, all about reducing the risk in your investments right now. You can scan the QR code or click the link in the description of this video to get that free report on marketbeat.com right now. Well, for this company and a couple of the others that we've talked about, there's a lot of those geopolitical issues that are impacting the stock price. As an investor, how much weight should they put on those issues versus the fundamental success of the company, the product they offer, and just kind of their business model? Do geopolitical issues overweigh that at times?
Well, I would think that they're one and the same because when you try to project the company's fundamentals forward, the financials, you have to take these risks into account. And, in academic finance, that's what you would call a discount rate. So this company is being discounted by a lot. It's, like I said, under 70% of its 52-week high. So I think that those risks have been already priced into the valuation today. Now, here's the main difference. This company trades at the highest forward PE ratio today, right above 23 times. That is above TSM, that is above AMD, that is even above Nvidia. So, what does that mean? Some people would call this an expensive company. Some people would call this filled with downside risk. Now, seasoned traders and seasoned investors will remind everybody that the market always has a good reason to overpay for a stock if they believe that it could outperform the peer group and the broader market in the months to come. And I think that ASML, at this fantastic risk to reward ratio, is going to prove the market right in its overpaying for the stock.
Very interesting outlook on that company. Well, Gabriel, we've talked about three chip makers and really the chip maker industry, but you have one bonus company for us today to talk about that's not a chip maker itself, but could benefit alongside the sector.
Right. This name would be a data center name that everyone has been making a fuzz about, and that is SMCI, Supermicrocomputer. Now, everyone knows that the stock has been under scrutiny because of the accounting practices, because of the potential allegations for fraud, because of this, and that, right? But the company has managed to tame those fears recently, which you see in the recent accumulation of buyers as the stock reached over $60 a share. Now, today's discount can be only blamed on the broader market discount as well. When the S&P went down into correction territory, and I think that only gives those who couldn't buy in the first rally to give a second chance for another rally to come. Now, there's one specific factor that I would look at in this trade, and that is the $7.2 million worth of call options being bought as of February 2025. Now, as you know, call options have an expiration date, so this big bet, which, mind you, is leveraged up through options, might even be bigger than 7.2 million, has an expiration date as well, which means that these traders may have a specific catalyst down the line, which is typically 3 to 6 months ahead for SMCI to break out again into those new highs, if not make a 52-week high again.
Yeah, with so many big swings in a short period of time, traders tend to love stocks like SMCI to take advantage of the different swings. What does it mean for more of those long term investors who might be looking at the long term future of SMCI? How do you make the right purchase when there are so many big swings and so many traders influencing that price?
Well, I would say keep the connection within the industry, right? The industry in chip making and semiconductors, just like any other, has a value chain. Now, the value chain goes like this: ASML, TSM, they make the manufacturing equipment for then NVIDIA, AMD to make the chips. But then you have to ask the question, what are these chips being used for? What are these chips being bought for? And it's either consumer electronics or data centers to train these artificial intelligence models, these large language models that are being now implemented into every sort of business in the economy. Now, that would be the bottom of the value chain here, as you go from manufacturing equipment to chip makers to the ones that are in the end user sort of market. And that's where SMCI comes into play. It might not be the first to rally, it might not be the first to get the optimism, but trust me, once these chip makers break out, once the demand for AI keeps on coming, data center cooling systems, efficiency systems, and all the other manufacturing and all the other services that SMCI provides is going to get its day under the sun as well. And you can already see it with $7.2 million worth of call options being bought, with institutions also buying the stock, and with the company managing to stay listed despite all of the allegations, despite all of the threats of being delisted from the NASDAQ, and despite everything else that's come its way. It's outperformed the market, it's outperformed the peer group, and I think that it has a chance to get to a new 52-week high as well.
Gabriel, you and I have talked about SMCI in the channel before. If you've missed that video, go ahead and check out that full video too. And let us know what you think about SMCI and the other three chip makers on this list. Thanks again for watching, everyone. And as always, happy investing.